Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. This is part of the 1 million by 1 million global virtual accelerator. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we've been doing these free mentoring roundtables for many years. This is the 508th session. We started back in the fall of 2008 with an experiment, which then blossomed into the launch of the 1Mby1M program in 2010. And so just the program we've been doing over 10 years and the roundtables we've been doing for longer. We've had over 150,000 people participate in these. The event is being recorded. You will find every single roundtable recording on our YouTube channel, 1M1M Roundtable. If you're following us on Twitter, first and foremost, you can follow us at 1M1M and at Stromana, and we publish a lot of interesting content. You learn a lot from what we publish, and we've had people learning by following our free content for a long time. If you're live tweeting today, please use hashtag 1M1M. And this is a roundtable, not a broadcast, so we do want you to participate as much as possible. I will put these instructions up on the screen a bit later when we're ready for call-ins. We do have a lot of scheduled programming today. We have an interview first, followed by, I believe, 4 investor pitches. All of them are from overseas. America is busy watching elections today. I was just telling Maureen right before we started that I have not watched so much television in a long time. So we are going to start today's session with a conversation with Keith Bank, CEO and founder at KB Partners. Keith, welcome to the show.
Good morning. Thanks for having me on. I appreciate it.
So let's get acquainted. Tell us a bit about your background as well as what you're trying to do with KB Partners, what is the investment thesis, and so on.
Sure. So I've been in the venture business for about 25 years. I started out as an angel investor in the mid-'90s when Chicago and the Midwest had a real void for early-stage venture money. Did a series of one-off angel investments with my own money and some other folks that liked to follow me around, and had some good early success and parlayed that into a couple of early-stage tech-focused venture funds. Did that for about close to 12 years, and once those 2 funds were fully invested and harvested, I went back for about 7 or 8 years to my angel investing days. I thought I was better at finding interesting entrepreneurs and opportunities, and did a series of 18 one-off deals, again, with my own capital and some other folks that like to invest with me. We had a really good run. And a handful of those deals happened to be at the intersection of sports and technology. It's an area that I'm certainly very passionate about. I was a 3-sport athlete, always loved sports, followed sports. And the more and more I looked at the landscape, there were very few people doing early-stage investing in this area. Thought it would be an interesting niche. And in late 2017, early 2018, decided to get back into the fund business and raised a $41 million early-stage sports tech fund, recruited a few partners to join me, and we've made 12 investments in that fund, about to make our 13th. And first of the year, we're going to be launching a new $100 million fund to continue along the same path, and we've added a phenomenal new general partner to join us for that fund. So that's kind of quick and dirty version of my my VC career.
So where do you invest? Is it all over the U.S., all over the world? What's your geography?
Primary focus is U.S. and North America. We've made one investment in Europe to date, but for anything outside of the continental U.S., it would really have to have a much higher bar. We're extremely hands-on, and we invest in seed and Series A and distance and perhaps a time barrier, language barrier, other things. It just adds one more variable that just makes it that much more difficult. So we've opted to for the most part, stick to the continental U.S., and it's served us well to date, even though there's obviously a lot of great opportunities all over the world.
And are all the partners of KB situated in Chicago or the Chicago area?
They are. Have three partners. We're focused in the northern suburbs of Chicago in an area called Highland Park.
Okay.
Pre-COVID, obviously, we were on a lot of airplanes and traveling a lot. We have portfolio companies on the West Coast, East Coast, Midwest, pretty much all over. That came to a grinding halt 8 or 9 months ago. We've been working for the most part remotely since then. It's been an interesting time period. A lot of highs and lows with sports being canceled for a while. We were a bit concerned when that's our investment focus, but actually most of our portfolio companies, I think, have probably been more positively affected than negatively because we have a lot of investments in video streaming, immersive media, esports. Also, just I think more by luck than anything else, a few of our earlier investments were in golf, fishing, cycling, sports that people were still able to participate in throughout COVID, where they didn't involve as much person-to-person contact like many of the team sports.
Mm-hmm. And so I'm going to get to actually talking about specific trends and specific companies in a moment. Just want to clarify one thing, which is the stage issue. Give us a sense of what is your definition of seed. What do you like to see by way of validation before you're willing to write a check, and what size check do you write as your first check?
So typically, and I say we're extremely entrepreneurial, so we try not to set a lot of rules, but I would say for the most part, we're not backing two people in a garage with an idea. It's typically where there's a mostly or fully hardened product or service, usually some early customer traction, whether it be paying customers or betas. Our typical check size is $1 million to $3 million out of the box, and we reserve a similar amount for follow-on in the companies that merit such. The team is usually 3 to 10 people. Maybe they're missing 1 or 2 key areas, but for the most part, they have the bulk of the management team fleshed out. And we look for, enormous market opportunities, some proprietary aspect to the business, whether it be for patents or just intellectual property that would be very difficult and expensive for someone to replicate. But first and foremost, beyond everything, it's all about the who. We have a saying at our firm, the who is way more important than the what. The what has to be interesting, but without the who, we're not going to make the investment. So we spend an awful lot of time getting to know the entrepreneurs and look at all kinds of areas from are they coachable? Are they malleable? Are they flexible? Do they have the ability to attract and retain talent? Are they charismatic? Do they have a cast iron stomach? Do they have grit? A lot of things you can't really put down on paper, but you kind of know it when you see it. So in the early stage, we think that's super important to really focus on the team and the who.
So now let's do some case studies of what you have invested in. And as you are telling us these stories, tell us a bit about what did you see? When did they come to you with what? What did you see in them that really captured your fancy?
Sure. So I'll give you one early example that predates our fund, but it's a company called Club Champion in the high-end custom golf club fitting and building industry. And when I decided to attack it, people looked at me like I had 3 eyes in my forehead, like I was crazy. I thought it was a very mom and pop niche type business that hadn't been handled in a professional manner. Like many sports activities, a lot of entrepreneurs in the space are former athletes, former coaches, hangers-on or whatever, and they may not necessarily have the business skills or acumen or experience to be successful, but they might know, about their specific area or sport through having participated in it. And I thought that this industry was ripe for someone to come up with a business model with good margins, good ROIs, and run more like a professional business as opposed to a mom and pop shop like most of the competition was. Started in Chicago with a couple of locations. We've since grown it to 75 locations from coast to coast, about to start expanding internationally. Our early investors made about 38 times their money when we sold the business. So it was a very, very good deal for us, for our investors. I was extremely hands-on in the business, structured kind of the company, not just from a legal perspective, but also from a business perspective, how our model was going to be set up, what size locations. This is a brick and mortar business too, which is typically different from anything we invest in. But getting the model right, getting the margins right, getting the right team in place, picking the right real estate, making sure the business would scale with systems. So was very involved pretty much in all aspects of the business. And honestly, going in, I thought if we made 5-6 times our money, we'd be doing good, and thought it was kind of a sleepy industry and maybe didn't have venture characteristics. But after doing the long march, we were rewarded very handsomely.
Great. Let's talk about some of the digital businesses in sports tech.
Sure. So one of the ones I'm particularly proud of, and that we got a lot of activity going on right now, is a company called Phoenix, Phenix. And this came to me in a very unusual way. People always ask, how do you source deals? My son was in the commercial real estate business. This is going back about 4.5 years ago, and he called me one day and said, Dad, I like what I'm doing well, but I think I want to go to work for an early stage tech company. And I said, quit your job and go find something. And he did, and he found this company, and about 3 months into it, he called me and said, Dad, you really ought to look at what we're doing. This is some pretty interesting stuff. And I did. And basically, Swiss national who had come over to Northwestern to get his PhD in video streaming in 2002, before anybody even knew what video streaming was, had basically re-architected an open platform called WebRTC that Google had developed about a decade ago to handle real-time communication or chat, kind of one-on-one, 1 to 3, 2 to 3, 3 to 5. And it was architected for speed, but not for scale. And Stefan Beer, the tech genius behind this, came up, he thought that WebRTC was going to become a standard and was going to be embedded in all web browsers going forward, and he was very prescient and wrote about 2 million lines of code over a series of years, and basically kept the 2 endpoints from WebRTC and re-architected everything in between to allow not only for blazing speed, but also for scale to broadcast size audiences and total synchronicity between people, regardless of where in the world you were watching, who your internet provider was, what device you were on. And we now have a company that's a platform as a service model that can stream video with less than half a second of latency to tens of millions of people concurrently in total synchronicity and broadcast quality. Why is that important? With the emergence of sports betting, to be able to make micro bets on sports while a game is going on. Is the next play going to be a run or a pass? Is the next pitch going to be a ball or a strike? Is Tiger Woods going to make this putt? Is James Harden going to make this free throw? The pundits believe about 70% of betting activity going forward is going to be on these in-game micro bets. So we enable that. We're the only company, to my knowledge, in the world that does enable that. All kinds of other use cases. We power Mannheim Auto Auctions, which is owned by Cox, the big cable company, the largest auto auction platform in the world. Used car dealers from all over the world go on to bid on cars. And by definition, an auction has to be in real time to function. If you have people from all over the world trying to bid on something and they're 30, 45 seconds, a minute apart, obviously it all falls apart. So we have lots of use cases across sports, auction, trivia. We're starting to stream concerts from rock stars' homes in this COVID environment. They want to be able to interact with their fans and know when they're singing a song, they want to hear applause, or if a comedian's giving a sketch, he wants to know if he's bombing or if people are laughing at his joke. And without real-time two-way communication, you can't know that. So there's just a host of use cases for this technology. We're in the midst of closing a $15 million Series B funding round. We've just launched a bunch of projects with several major telcos and sports properties, and really just kept hitting the scaling part of this business.
So do you go to market as a platform with that company?
Yeah, it's a platform. It's a technology solution that a tech provider could either white label and license us kind of like Intel Inside, or they can also subscribe through everything we do is via software, so everything's done through data centers. We have 32 data centers for our POPs around the world right now.
Who's doing their application development? Who's developing the use cases? Is there a developer? Is this an ISV startup network around it that's doing the developing?
No, so we have an internal engineering team that basically has not only developed all the code, but is also doing the integration and implementation with the various customers. But one of the geniuses of what Stefan created is it's a totally automated system, so you don't need scores of people sitting around making sure things are working properly. It's all provisioned in an automated fashion, and everything is set up in such a way that it requires little, if any, human intervention to run smoothly.
All right. Do you want to do another case study?
Sure. Another one, a recent investment called Hammerhead Technology based in New York City. I actually made a small angel investment in this individual several years ago. His name's Pete Morgan, and he's an avid cyclist and had an idea that there was a way to create a better bike computer. Kind of the incumbents, Garmin and Wahoo, had devices, but they really hadn't innovated much and not much had changed. And his vision was to create a iPhone-like device that would sit on the handlebars. This is for people cycling outside as opposed to Peloton and some of the indoor cycling apps. And so he came up with a very ruggedized hardware and software combination that does everything from GPS, turn-by-turn directions, ability to compete with people across the country, track your workouts, call up interesting new routes. And we just launched our version 2 product called the Karoo, K-A-R-O-O, the Karoo 2, and have had just incredible demand and pre-orders. As part of our Series B financing, we brought in Lance Armstrong and his fund to invest. And while he's a polarizing figure to many, he is kind of the gold standard for cycling and cycling knowledge. We also brought in some other very interesting co-investors, and I think that company is about to take off. But again, what we saw was just a super passionate team, very knowledgeable about the space, with an idea how to disrupt what was kind of an antiquated ecosystem, and they've done an amazing job of doing such.
So now, my last question is about what are you looking for by way of exits? Are you looking for unicorn-style companies, or are you looking for, small capital-efficient businesses and early exits?
So we typically will not invest unless we think we can make at least 10 times our money within a 5 to 7 year time horizon. And by definition, that means you got to look for companies that hopefully can scale to 9 figures in revenue in a relatively reasonable period of time. So, we're looking for those outliers that can provide those outsized returns. And as everybody knows, in the early stage venture business, historically, the numbers are 3 out of 10 businesses get their money back or profit, and 7 out of 10, you get pennies on the dollar, or you lose your money. We've had a much better track record than that, fortunately. But, you got to win big on the ones that you win on to really have outsized metrics on the return side of the business. So every deal we go into, we hope that's the case. They obviously don't all turn out that way. But, we're looking for 15 to 30% ownership stakes typically, so significant minority ownership stakes. We almost always take a board seat. We're quite involved in the businesses. And most of the deals we do are single-digit million pre-money valuation. So we're investing at a 3, 4, 5, 6 million pre-money valuation. For the most part, sometimes we break that rule on the low side or the high side. But that's kind of our model.
Great. Well, I think I've got what you're doing, and we will definitely factor that into as we look at deals, and if there are dots to connect, we will.
That would be great. It would be great. Yeah, the space we're in is kind of niche and small, although more and more people are getting into it. And there's just so many. Like, if you would have tried to do a sports tech fund 5-6 years ago, I think people would have, again, not been very interested, because all of the things that have evolved with artificial intelligence, sensor technology, concussion technology, youth sports, software platforms, sports betting, fantasy sports, esports, the connected athlete, health, fitness, and wellness. A lot of those things were really in their very early stages or didn't even exist. And now all those things are exploding, all the immersive media stuff and streaming. So we think we're in a neat space. It's something we're very passionate about. And, we look forward to continuing to hopefully be one of the leaders in the area.
Yeah, well, one thing I always talk about in our program is, just like entrepreneurs look for product market fit, they also need to look for investor entrepreneur fit. And domain knowledge on the investor side, they're not only fit by stage and geography and sector and all of that, but also just domain knowledge. And I think sports tech is a very specialized area where not many people have deep domain knowledge. So look,
I couldn't agree with you more. I always counsel entrepreneurs that are looking for money that as much as we interview you and want to know about you, you should want to know the same about us. Not only, as a firm, but who within the firm you're going to be working with, because you're going to spend an awful lot of time together, probably as much or more as you do with your family. So you want to make darn sure you're comfortable with the firm, comfortable with the person, you have a good working relationship, because, I've seen situations where investors and founding teams, get at loggerheads, and that's not good for anybody.
Yeah. Very good. Thank you for coming, Keith. Nice to meet you and nice to introduce you to our audience here.
My pleasure. Thanks for having me on. Greatly appreciate it.
Bye-bye.
Bye.
Folks, we are going to switch to the entrepreneur pitch session of today's session. If you're pitching today or on a later date, just keep in mind that this is a safe working session. You don't need to be nervous. You don't need to be defensive. You can discuss freely whatever it is that you are struggling with and need help with, and we will try to weigh in with experienced feedback. And then if you decide that you agree with the feedback, you'll do something about it. You may disagree with the feedback and not do anything with the feedback. That's up to you. It's your venture. My job is to give you candid feedback. Remember one thing, not all businesses can raise money, should raise money, and raising money doesn't guarantee success. So with that preamble, I'm going to go to, I believe, one second, Joginder Singh as our first presenter. SafeNet is the company. Joginder, please unmute your line and tell us what you're working on.
Hello. Hello.
Yes,
Hi,
we can hear you.
Singh. Yes, I'm Joginder Singh, Director of Nook Technologies, and here I'm representing SafeNet, and we are internet service provider in India. Next, please. Next slide. Yes. Our vision is to provide better internet service and educate people about internet. Next slide, please. We have found many problems with the current operators and service providers. We have broken whole procedure in 3 major steps. Before getting a customer has to reach us for connection request. And for that, we have many popular channels for communication like phone calls, WhatsApp, email, and other social platforms. During connection, we offer a solution first, then we talk about other formalities like documentation, registration forms. After sales support is the main thing that separates us from the crowd. We focus on experience instead of speed. Next slide, please. In India, even educated people avoid digitization because of complexity. We have simplified our procedures so a customer can think of a service rather than caring about procedures. We educate them about potential of an internet connection and how they can simplify their lives with it. We are continuously engaged with our customers to improve our quality and to deliver useful messages. As I already said, we focus on experience so customer can enjoy our service without technical difficulties. Next slide, please. Our business plan is to charge for tariff chosen by our customers and other networking services. Next slide, please. We are in competition with two major companies, Reliance Jio and NetPlus, but they have poor network, longer waiting time, and not able to resolve all the queries of the customers because they do not appoint a particular personnel for this kind of work, but we have done that. Next slide, please. We ensure the quality of our service and resolve all the queries by working with our customer. Like, for example, a customer is facing issue in video calls, but he or she has a better plan, a better internet plan, but he is still getting issue in the video call. So we need to visit his or her location and check why he or she is getting issue in video calls. Besides, she has a better internet connection. So we need to find out and resolve his or her query by specific reasons. And we educate them about potential and limitation of internet so they can use accordingly. They should know what they can do on internet, what they should do on internet, what they cannot do on the internet, and what they should not do on the internet, because there are so many safety aspects on the internet. Next slide, please. Till today, we have invested 200,000 Indian rupees and acquired 150 customers with 97% satisfaction rate. We have built a data center to deliver services and a network throughout the city. Next
and this
slide,
is,
please.
which city are we talking about? Delhi?
This is Kurukshetra city. It is a holy city in Haryana state.
Okay. All right.
Yes. And this is our roadmap. On 200 customers, we will double our installation team members. More the team members, more customer can be achieved and acquired every day. On 400 customers, we will start voice telephony. Voice telephony is still required for offices and domestic users because smartphone is not suitable for each and every situation. And on 600 customers, we will start IPTV services. People want to watch their favorite serials and movies on demand, and IPTV offers on-demand videos, movies, serials. And on 1,000 customers, we will repeat the model on the other cities as well. Next slide,
So
please.
let me ask you a couple questions here. How many installation team members do you need to support 150 customers?
20 members will be enough to speed up our process.
So about 7 to 10 people are supporting, 7 to 10 customers are supporting by each installation team member.
Actually, installation team is different and support team is different.
Okay. So what I'm trying to understand is what are the economics of this? How much are you charging your customers?
Yes, there are two type of charges. First of all, installation charges. When a new customer approaches us, we go to their premises and install a connection, and we charge 2,000 Indian rupees for as a installation charges. And there is a plan tariff, you can say, three type of plans, 20 Mbps, 50 Mbps, 100 Mbps. And according to their speed, they have variety of prices. Like 20 Mbps the cheapest one, 50 Mbps the middle one, and 100 Mbps is the highest bandwidth we are delivering right now. And on 100 Mbps, we are charging 1,000 plus taxes right now.
Per month?
Per month, yes.
Mm-hmm.
Installation charges is the one-time cost, and tariff charges are on the monthly basis.
And with that 100 Mbps, what kind of services can you support?
Each and every, you can stream 4K videos, you can play low latency video games, and you can do high-end tasks like if you are in a professional like you are a coder or programmer, developer, software developer. We have provided 100 Mbps connection to our local companies which are in software development and like corporate offices.
So what about Zoom calls and stuff? Can that bandwidth can support that or not?
Yes. Our 20 Mbps plan can smoothly support Zoom calls, but if you have many members in the house or in the office, then we recommend 50 Mbps. If the group increases, then we recommend 100 Mbps. For one or three members, 20 Mbps is enough for WhatsApp call, Zoom call, WebEx call, and Microsoft Teams and Google Teams. 20 Mbps.
And what about Netflix, for instance? If people want Netflix, does the plan support that?
Yes, our lower plan supports each and everything, but if the quantity increases, then you need to upgrade the plan. If you have 6 big TVs, big screens in your house, then you need to switch from 20 Mbps to 50 Mbps.
And you are providing the configuration of Netflix into television and everything, all of that installation and configuration stuff your installers take care of?
We provide connection and other subscription is taken by our customer.
No, other subscription, but what about the installation and the configuration? Like, let's say they take Netflix, you're going to do the configuration in the household? Because, I mean, I'm assuming that these are not very technical people that you are servicing, right?
Yes, there are each and every kind of person. Some of know everything and some of know nothing. And even we met many people whose children are in abroad and they need to video call them, but they really don't know how to proceed, how to connect to them, how to do.
Right.
So we educate them about how they should proceed, which are the easiest steps to do their task. A video call on watching Netflix, streaming videos in Amazon Prime, or how they can configure if they brought something new device, but they don't actually know how to use it, and they call us. Please configure this device with your internet connection. Then we do that.
Okay.
Because yes.
So I resonate with what you're saying, because I've heard that Jio is customer service-wise very bad. They keep people waiting for a long time, and I don't know anything about the other competitors that you talked about, but I know that Jio is hard to get to and so on. So I suspect a good customer service, internet service provider can be attractive for customers, especially when people can actually reach you, as opposed to never being able to reach you and having to wait for a long time. So I like that aspect of it. So let's go to what questions you have.
Yes. And this will be the revenue after funding. And in all these 3 years, we will focus on customer acquisition and network expansion. By network expansion, we can reach more and more customers. We will add one customer per day as average. from new customer, we will charge installation charges and tariff charges. And this is in brief, but we are ready to discuss financial projection in detail. And we don't put detailed projection in this slide because it will take more time to explain and
That's
allocate
fine.
each and every. Yes.
So what brings you here? What question did you come here with?
Yes. The main reason is the funding, because we are attracting customers. We are there is a demand in the market, but not uh, we are not able to fulfill the demand right now. So to buy stock, to hire more people, and to prepare more sport teams, we need funding, and that's why I am here.
So, I'm looking at your projections, and I can assess based on what you've told me, the margins. I think it's a low margin business that grows relatively slowly. And those are not characteristics of what investors are looking for. I think what you're doing is actually valuable in that it's something that I think customers have need for, because just the basic internet connection, getting proper high, good customer service internet connection in India is a problem. I agree with that. I think there is a demand for that, and I don't think Jio is doing a great job with that. But it is a low margin business and it's a slow growth business. So I guess the question that you're going to have to answer if you want to raise money is, how do you address those objections, and how can you frame this business to be something that is higher margin and higher growth? And, based on what you're presenting, that's the criticism that you're going to have. So, I don't know all the details of what you're doing, how you're doing what you're doing, and what your assumptions are, but I'm willing to work with you to help you address these objections. I would suggest that you hold on. I will explain how to use 1 million by 1 million after we are done with the pitches, and then you can decide if you want to join the program.
Yes, one thing I am agreed with your objection, but I want to clarify one thing here. Before funding, we get the stock, the routers, the wires, the accessories to install connection, but the growth I shown here is the current growth. I choose the current growth to validate these figures. But to be honest, when we raise the fund, we build more teams and we hire more people. These figures will go high, but I keep these figures totally in a range that we can do right now before funding.
Yeah, that's fine. That's fine. So these are your bootstrap numbers. If you were to infuse funding, your numbers would go up faster, and so you're going to have to present something that an investor can evaluate. Investors evaluate a business plan. So what is that business plan? What are the assumptions in that business plan, etc.? So this presentation doesn't really, it's not an investor pitch. You're going to need to create an investor pitch.
Okay. One thing I do not include in this slide is that we are working in one city right now, but from government we got license for 4 cities right now. Right now we are working in one, but we still need to work in 3 other cities. So when we work in
Joginder, there is a very well understood framework of what an investor pitch needs to contain. You don't have what an investor pitch needs to contain, and you're going to need to learn how to create an investor pitch. I'm happy to teach you that, but that's something that you're going to need to learn.
Okay, right. I'm agreed.
Okay. All right, so hang on. We'll talk about that a bit later. We are going to go to the next presenter, and that's Anand from Sadhguru Ventures.
Hi, good morning, Shamana.
Good morning. How are you?
Very good, very good. Quick background about myself. I'm a qualified chartered accountant and lawyer by qualification. Have spent almost 2 decades working in the Big Four in cross-border accounting, tax, payroll, HR kind of projects, and that's a quick background. And the venture that I'm speaking of. Next slide, please. Yeah, and the genesis of this venture that I'm presenting to you is coming from the years of experience that I've had working with clients, typically multi-country, who would want to, let's say you are headquartered in US but you have presence in 80 odd countries across the globe. There is no single platform where you can touch and get to an accounting, tax, payroll or HR products and services all put together. Forget, of course, you can go to the Big Four, but it's still country by country. There are no multi-comparative products or services that you have access to, and that's the reason why I thought of possibly setting up a global e-commerce platform, which which provides not just one country products or services. It will be multi-country, which one CFO headquartered in the US could access all his country's needs. Next slide, please. Yeah. So the target customers are obviously the CFOs, the head of the tax division, HR and payroll, and pain identified, like I said, and this is not just for small companies. I have come across this for the some of the largest companies in India, in US, in Germany, where I've worked with, where you're not able to have a control or a dashboard where you can access these products and services for multi-countries and make an informed decision of which product is comparable to what my other advisor provides, and that's something that I have seen as a live opportunity available across the globe, not just India, but from my experience in the US.
So what size customers do you want to go after? I think these are, the size determines a lot of issues here. What size customers are you talking about?
Well, I actually was, I'm thinking of both the SMEs and the large companies alike. Certainly the SME companies, I would think will be more than happy to work with the non-Big Fours, and therefore, a portal like this really helps them. But coming to the large companies, while, they have access to the Big Four consultants and, and the like, but still a platform like this is something I would imagine any CFO would like to see whether he is getting the right suite of products and services in in the remotest part of the countries he would like his company to reach.
Have you done any validation?
Validation, like I said, is not with the with the market that I have set up, but in the past where I have worked as early as a year back, worked with clients who have presence in 30-40 countries, and their struggle with choosing the right product for the payroll, the HR, and the accounting, like I said.
So that's something that I see. This is not something that you are providing solutions for. You're just putting like a kind of like a comparison shopping platform.
Yes, that's correct. So my job will be to
contemporary. I see. Got it. Okay.
That's correct. So because I mean, the choice for me is to do everything with the teams that I can set up across the globe, but that wouldn't reach the scale that I would like to get to. So it is more being an enabler, and then empaneling the product companies, the service companies, validate them, and then make that available to the CFOs to choose from.
So go-to-market strategy is not what you have here. Go-to-market strategy is how do you acquire those customers. This is, you're talking about listing products and listing service providers, etc. But what about how do you acquire customers? That's what go-to-market strategy all about.
I agree with you. Sorry about that. Yeah. So in terms of the actual acquisition, certainly it requires a mix of both feet on the street, reaching many of these multi-country enterprises and talking to them about the portal and what it gets to, and of course the online marketing as well. More of also affiliate marketing and blogs to make the customers knowledgeable about what is the current state and how this platform will enable them to make better choices and decisions. Yeah, that's a combo of all of them certainly is what I would think of. But yeah, I must admit that, that's the reason why I'm here, Shramana, because yes, from a functional perspective, I know that there is a value for these products and services, but, how do I actually, what is the right strategy to approach before we launch? That's something that I'm here to get to you.
Sure. You're most welcome to join the premium program. We'll be happy to teach you pretty much how to build the business step by step. Absolutely, that's what we do. Happy to help you with that. But should products and services thing be separate or joined? They should be separate most likely, because the same people who offer the products are not the same people who offer the services. There could be people who offer products and services, but typically, like for example, if you go to an Upwork and you look for bookkeeping services, for example, there will be all kinds of people who have different skills in different bookkeeping software, QuickBooks skills and NetSuite skills and so on and so forth. So it depends on what people are looking for. Are people looking for that? Are people looking to evaluate products and comparison shop products? What is in what situation should one be buying a QuickBooks subscription versus a NetSuite subscription versus something else that you have in maybe Singapore or Malaysia? So that's, you have to think through all the use cases in which what people are going to be using your product, and you have to design a website that is friendly to that. I'm going to point you to one article that I wrote a long time ago that still people use a lot to design products, which is Web 3.0 equals 4C plus B plus P plus VS. Maureen, could you please pick that off the website? It's on the hot topics section of the blog, and just share it here. Anand, this is a little formula that I use to help people design good user experiences. Your context is accounting and finance, and there's a whole suite of products. People could be coming to your site looking for products. They could be looking for services. They could be looking for service providers. So there's a whole lot of use cases that you need to think through. So the 4 C's here are context. Your context is accounting and finance, B2B accounting and finance. And then there's content, community, commerce. So you should think through what is your strategy vis-a-vis content, community, commerce, what is the strategy vis-a-vis personalization, what is the strategy vis-a-vis vertical search. So go take a look at that and kind of start thinking about it, and then we can brainstorm more. If you're in the premium program, we'll have a chance to talk every week, and I'll have a chance to shepherd you through all these issues as we go along.
Sure, absolutely. Look forward to. I'll be in the program then.
All right, great. Amogha, you're next. Digitalien, Hyderabad.
Hi. Hi, it's so great to be here, actually, presenting in front of you.
Good. Go ahead. Let's hear what you're doing.
Okay, so in a few words, our company's name is Digitalien. So lean in Spanish actually is link. So if you see the logo below, the red, our entire story behind the name of the company would be, the red depicts a stop in your career, right? And the green is the link between the digital world and your educational platform. So it is, our company is helping people who somehow they somehow have some obstruction in their career path. So once they come to us, we try and understand what is happening with them. And then the green is a go sign. So we help them overcome whatever obstruction there is.
Okay.
So what we are planning to do is to create an educational ecosystem. So the things that our ecosystem will bear will be one LMS platform. So the LMS platform will be a link between the students and the teachers of the university. It will be a link between the students and the webinar hosts. It will be a link between the students and the tutors or any of the workshop holders.
Amogha, what segment are we talking about? Is it the university segment?
We're doing an educational ecosystem.
Yes, but
so
what age group, what stage of education are we talking about? Are we talking about university, talking about K to 12, talking about professional ed? What are we talking about?
So our main target group, if you talk about, is the 8th to the 12th, and then the people who are going out for universities. But as a whole, we're also looking at people from their first standards. So if you see a model like a White Hat Junior right now that's coming up a lot, they start from the first standard, right? So we're also going to be doing that, but we're not only providing things such as coding. We're trying to broaden the sectors to extracurricular activities or, subjects in which people are actually interested in.
So your core product is a learning management system?
It is one of our core products, yes.
Very crowded space, extremely, extraordinarily crowded space.
It is a crowded space, but as they say, it's crowded for a reason. And what happens is...
Getting into crowded spaces is a very difficult thing to do. It's noisy and differentiating in a crowded space. I want to know, if you're going to go into a crowded space, I want to know how you're going to differentiate and how you're going to communicate that differentiation to a certain segment where there is acknowledged need for something different.
Hello, Samana. Hi, I'm Sharan. I'm also one of the co-founder. So I would like to answer that question. Yeah. So basically, I acknowledge that it's really a crowded space, but here, when we say that we are planning to create an ecosystem, it means that there are many of the features that we are trying to implement where no one else in the market, at least in this existing market that we looked at in our market research, they don't provide that. So one of which is, having an email system and also taking advantage of the existing, platforms like Blackboard or Procure for better testing testing management systems. Right. So, we are actually planning to get in third parties and make it very seamless.
Do you have any validation? Do you have a customer that you're doing an instance of what you're talking about with?
Actually, Samana, about this LMS platform right now, we are actually building it. The Android team is actually building it right now. So we don't have any paying customer for that because, and also, that is...
I'll tell you what worries me about your situation is that I don't see enough of a business case validation and you're going and building something. I will tell you my philosophy in how I teach 1 million by 1 million is do not write a line of code until you've got your full business strategy completely fleshed out, including validation, including, all the elements of how a business strategy is put together. Maureen, could you please share the self-assessment here? I'm going to talk about the self-assessment a lot as we go along. This is a strategic planning tool that we use. It's free. You can use it. I would like you to really understand how your business is going to be built before you spend a lot of time and money on building a product. Because my assessment, and I do this day in and day out, right? I talk to entrepreneurs and I assess their situations and I give them advice on how to improve their situations. I don't think you're at a point where you can start building this product because I don't think you know what you're building or what you need to build. So without doing the due diligence of creating a good positioning, good business case, etc., I don't think you should spend time or money in writing code yet. So that's my both pedagogy feedback as well as your situational feedback. I can access based on what you've told me. You don't know what you're doing yet.
Hi. So a couple of things. I agree with the fact that the place is crowded. I think it's one of the things that determine the attention areas that the sector we're looking into right now is very crowded, and the bigger sharks can change their schemes in a much easier way to suit the customers in case we're providing something that they're not already providing. But when we go as far as talking about paying customers right now, LMS platform is not the only thing we're looking into. We're also looking into consultations and profile enhancements. And
have either of you done this before? Have either of you done a startup before?
Yeah, one of us has.
And what happened to that?
Yes, so Soma, I had a startup before that was into Sojourner space, that is dealing with accessories, shoes, clothing space, apparels. Right. So basically what happened was we really made a great business, but at one point the market was very saturated and I was the only person. And it was at a very young age that I started it. I think I was, around 17 years old. I didn't know what to do. And then it vanished again. So, yeah.
So you have the experience of being in a very crowded market with a different business, and you know how hard it is.
Yes. No, definitely. I 100% accept that. 100% accept that.
So, I'm actually okay with people going into crowded markets, but there is a way to do that. You have to position your company in a way that you're playing into a gap in the market. Crowded markets have gaps. But the problem I have with what I'm seeing here, and the reason I'm, advising you to pause and figure out what is the right positioning, where is the gap that you can actually go into and have a meaningful business in a crowded market. So, you don't do what everybody else is doing. You have to find which segment of the market has the gap and where can you meet unmet needs. And there is a methodology to that. I'm happy to teach you that methodology, but right now what you're doing, you're going to run into the same problem which you did with the last business.
Mm-hmm.
Okay, so hold on. Let me. By the way, this is true for Joginder and you guys. You should take a look at the self-assessment and run the self-assessment on your business and try to answer these questions. These are not all the questions, but this is a very good starting point for any kind of strategic planning as well as investor due diligence. Investors would ask you exactly these questions and a lot more, but this is a very good starting point. And then hold on, let me explain to you how to use 1 million by 1 million, and then you can decide if you want to work within the program and learn our methodology and implement our methodology. This will force you to answer all of these questions, and then you can, get feedback on a weekly basis and coaching on a weekly basis. So, folks, if you like what we do here and how we do what we do, that's important. How we do what we do is important. I am not giving you all a pat in the back. I'm giving you feedback on where are the problems, what you need to deal with, whether is there a profitability problem, is it a customer acquisition problem, is it a positioning problem, etc., etc. There is a lot of issues that are going to come up, and I'm going to try to give you what is it that you need to be careful about. And if you like that approach, not like a rah-rah, everything is great kind of approach. This is a constructive approach where we want you to, avoid those common pitfalls and address the issues that need to be addressed. That's our strategy in the program, and that's the approach of the program. So if you like that approach and if you want to work with, a program that is proven, we've been doing this for 10 years, numerous entrepreneurs are using it, have used it, have been successfully in, going through the program, you're most welcome to join. But do not join the program unless you're willing to subscribe to that approach of studying methodology, applying methodology, and building in a proven methodology mode. I will take questions in a moment. Let me just go through a few of the questions, a few of the points here, and then I will take questions just in a moment. So in terms of resources, go to 1Mby1M.com, and you'll find everything there. You'll find the blog series. That is, it's free and it's very rich. You can learn basically from all the material that we publish, and it's a very, very high quality blog on entrepreneurship, including case studies, including trends, including, ventures and businesses, how to build businesses and how people are building businesses. The Entrepreneur Journeys book series is also a good learning material. There are 12 volumes of those. They're all case study-based books. They're all actually extracted. They're anthologies of case studies that we've published on the blog, but sorted by topic and specifically dealing with issues like solo entrepreneurs bootstrapping with a paycheck, or a couple of co-founders both keeping their jobs and while bootstrapping with a paycheck is something that we are very big believers in. We have no accelerator supports this method of business building. We do. We love this method of business building because it gives you a lot of runway. Maureen, could you please share the bootstrapping with a paycheck link from the blog, the course material? Go through this, and there's the book, but there's also a module of our bootstrapping course that you can learn from. So these are, interesting topics to understand in our methodology that may help you tremendously. These free roundtables happen every week. You're most welcome to come. You're most welcome to listen to the recordings. But you can only pitch once for free. You cannot keep coming back and getting feedback. If you want ongoing feedback, you will need to join the premium program, actually. If you just want to study our curriculum, you can do it through the basic, 1M1M basic. The premium program is for extensive methodology guidance. The curriculum is available through the premium. We help you with business development where we have contacts. We make enormous number of introductions. Ours is one of the most powerful Rolodexes in the industry. And we have private roundtables similar to these every week where you can come and get feedback on your project. That's the strategy consulting, mentoring, coaching, whatever you call it, but that is the interactive project-based feedback. We help you with financing. We have a terrific network of investors. Hundreds of investors work with us, but you do need to be ready. We will get you ready. We will work with you and coach you through the process of how to raise money and what you need. What does an investor pitch look like? What do you need to have in an investor pitch to get people to listen? And what needs to be changed? How do you structure an investor pitch, as well as what pieces need to be in it for investors to take you seriously, and then we can introduce you to investors. And finally, we do have a lot of clout, so media relations is also part of what we do. As I said, go through the self-assessment. These are the questions investors would ask you. These are the due diligence questions. These are also the strategic planning questions. So you should try to address these questions. If you get stuck on methodology elements and you can't answer something, you can do 1M1M basic. That's a curriculum-only solution, $99 a month. Premium is $1,000 a year. And basic is just $99 a month. So go into the website, go dig around, look at the descriptions of the premium, the basic, the FAQs, video FAQs, description of the curriculum. It is a case study-based curriculum. We have a lot of successful entrepreneurs who have helped us build this curriculum. They have generously contributed their journeys and stories, and you learn from them. And we have a lot of methodology that we teach through video lectures and case studies. Our methodology is lean, capital efficient, bootstrap startups. The philosophy is bootstrap first, raise money later. So on that score, Joginder, you are in a great place that you have already started validating. You have paying customers. You have 150 paying customers. That's very consistent with the philosophy that we use in our program. The fact that you have already validated your business puts you in a good place. You have to assemble the rest of your, pieces, elements of how to build a good, credible investor pitch, but on validation, you are good. So that's a very, very strong position to be in. So that's pretty much it. We have free roundtables. We have 5 more this year, 2 in November and 3 in December, outside of the holidays. And then we also have these rendezvous online where we are live on LinkedIn, Facebook, and Twitter on Tuesday mornings at 8 a.m. Pacific. You can catch me there too. I normally do Q&As. Like the last session, I did a whole lot of Q&As on getting rejected by investors, getting rejected by Y Combinator, etc. So it's a whole session on how not to get rejected by investors and Y Combinator and so on, and how to deal with rejection. What do you do if you do get rejected? So one of the tenets of how we operate is we don't want you to go to investors too soon and get rejected. Because if you do get rejected, then we've blown the cartridge and we can't get you back in there for 6 to 12 months. So when you go in front of an investor, we want you to have all your ducks in place. Otherwise, they basically reject you out of hand. Okay, we are ready for Q&A. You can dial in and ask questions. You can also ask questions in the public chat. So set your public chat to send to all participants, and I'll take questions from there. Joginder, you've sent me a private question. Let me see what it says. I have one question only for you, Shramana. As you said, not every business can raise money and not every business should raise money. What do you think about my business so far? So Joginder, I cannot tell you yet whether this is fundable or not, because I think your idea of what you're trying to do is actually a big idea. Because I know, because I have a lot of family and friends in India, I know that this is a problem. And I know that India has a large, population of people. So you can affordably hire people to scale your business and train people to scale your business. So on that front, actually investors like kind of hybrid businesses that are that have the dynamics that you're talking about. But I do need to work with you on a lot of things. I need to work with you on margin issues, pricing issues. What does how do you service these customers profitably? If people keep calling you in, if you have to keep sending people in, is that still a profitable business? There's a whole bunch of questions around it. So I can't say yet whether you can frame something as a fundable business or not without working on it with you, but I'm happy to work on it with you and help you figure that out. And if not, then there are other strategies of how to scale businesses. We can teach you that as well. Does that answer your question, Joginder? So folks, if you have questions about the 1M1M program, let me introduce you to Irina Patterson on our team. Her email is irina@1Mby1M.com. She will be happy to talk to you on Skype or phone or WhatsApp, whatever, and give you feedback about the program, whether this is the right program for you or not. So our program works in roundtables, which is where you get the coaching, and curriculum, which is the digital curriculum that you can do at your own time. The roundtable is synchronous. You have to come to a live roundtable to get, to dialogue with me and get feedback and strategize and brainstorm. But you also need to do a lot of studying offline through the curriculum, which you can do at your own time, at your own pace. That's how we do the premium program. Okay, questions? Any other questions, folks? Anybody? Yes, no?
Hi, we had one question. How important is it to have a CV? I mean, how beneficial is it to have a customer-funded business?
Well, customer-funded businesses is where you show validation, whether it's a customer-funded business long-term or not. In the early stages of a business, having customers who are paying for your services is how you tell the investors that, hey, look, customers are paying. I can show you that I have my product, my service has a demand. There is no bigger proof that you are finding product market fit than customers buying your product or your service. Which is why I really like the situation Joginder has put himself in, is that he is getting customers to pay. So if you can find a niche, in your case, if you can find a niche where there's a gap and you can build whatever is going to get you to fill that gap and you can get customers to pay for it, and then you can show that there is a large enough gap such that you can build a large enough business in that segment, in that category, then you can, get to the next level of funding and so forth. What's missing from your pitch at this point, or I think it's not just your pitch, I don't think you have the understanding fully fleshed out yet, is where are you positioning this business? You need to learn positioning very well. And I think given what your co-founder's experience is in going into a crowded market, you already know, in apparel, again, there are niches where you can go in where there is a gap, but if you go straight into a crowded situation where there is no differentiation, you're not going to succeed. Okay?
Yeah.
All right.
Yeah.
Anybody else? And by the way, there are companies that have figured out these gaps. And one of the things you could look at is somebody who's figured out the gap in America, perhaps, and you can do a concept arbitrage for India around the concept that that has worked in America but doesn't exist in India yet. That's a reasonable strategy too. With a different pricing structure, different, that's also an option for you.
That's what we started. We tried to reduce the price to get into people's minds. And
sorry, I can't understand what you're saying. Come again? There's something wrong with the line.
Sorry. Yeah, so that's how we started to get into into servicing, right? So we started with consultations and with things that we knew that people would opt for. And we started with a smaller fee, so people would come to us with that. So that's where we've got our customer base in. And that's where we're getting our data from.
We are very big believers in bootstrapping using services. So starting with consulting and actually getting paid for understanding the customer needs and the customer pain points is fine, as long as you are, starting to see repeatable problems. If you start doing a lot of consulting and many customers are telling you the same thing, that is a very good way to find gaps in the market. That would be fine.
Thank you.
All right. Okay, folks, that's it for today then. I don't see any other questions. We will adjourn for now, and we will see you next week. Bye-bye, everybody. Stay safe.